Good afternoon and happy Thursday, everyone. This is Scott Wohlers with River Place Capital. It is Thursday, July the 24th. I want to take just a brief minute to discuss what markets did last week, as the narrow markets that were driving just the large cap tech names, the Magnificent Seven, keeping the equity markets moving higher. That's the pattern we saw for the last couple of weeks of the second quarter and in the first couple of weeks of the third quarter. And the S&P 500 was up 59 basis points, or 0.59% on the week. The mid-cap index was essentially flat, down 3 basis points, or 0.03%, and the laggard on the week was the small caps as measured by the S&P 600. Those were down 90 basis points, or 0.9%. And as we moved into this week, we were looking for a catalyst to really get us broadening out in the market, and we really kind of got that over the latter half of last week and the beginning of last week in the regional banks. Now, we had gotten large banks and all of that in, and those earnings were very strong, but a regional bank is more going to be representative of the economy of those different regions and more affected by economic swings than some of the large cap banks and the mega banks, because they don't have the trading arms and things along those lines. And so they're more just pure loan demand and deposit demand. And what you're seeing there is great numbers and great beats and raises. And so what you're seeing now in the equity markets is a broadening out. And it's very encouraging. Now, you're not necessarily seeing that today as we keep going back and forth between growth and value in the equity markets. But you've seen some outperformance this week of the Dow over the NASDAQ, and that's going to be more of your everyday broad-based index is going to be your Dow, and the NASDAQ is going to be your more growth index. And so it makes sense that you can see some selling in these names that are up significant in the tech space to buy some of these names that have been left behind in fears of economic slowdown. When all of the data that we're getting, what everyone was concerned about back in April, has not shown up yet in the economic data. The economy still remains strong. This morning, jobless claims came in less than expectations, and that's less than the historical average. The economy is moving along very well. There are parts of the economy that need help and are sluggish, but overall the economy is doing okay. And we are growing as a country, and so it is allowing that. And the other thing that we track here at River Place from a technical standpoint is we've always tracked money flows. And if you've ever heard me talk about money flows, that's tracking the buying pressure of individual stocks and the impact that that has on the overall market. And if more stocks have buying pressure than selling pressure, then you have positive money flows in the equity market, and that shows a very healthy, broad-based market. And the analyst that we follow, and he went positive this week. He has not been positive yet or turned bullish yet on the equity markets since in a couple of months, and so he turned positive this week. And so what we foresee then is, while there's going to be continued volatility, of course, we still see a broad-based recovery and participation for the remainder of this year while things remain economically strong. So if you have questions about how to navigate this time or how to position yourself now that we're going to be more broad-based, is it time to maybe sell and rebalance personally, give us a call. We'd love the opportunity to speak to you and walk you through that. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.